So you want consistent results while trading futures? I'm going to give you the process which will help you do that every single day. A few steps that I'm going to lay out for you. You will have a better understanding of where your best opportunities lie. Let's begin. We have a blank canvas. This is pretty much how I like to approach every single day. Now we'll lay out some framework right here. This is essentially going to be our Friday candle. We can see right here, this Friday candle low is going to be relevant for us because number one, we're inside of this range. So you can see right here, we're inside of this daily candle. This day forms an inside day. So naturally, we're going to be looking for the inside day to break. Now, what led me to think that we'd break to the downside was actually a pretty simple comparison between assets. I went ahead and I compared YM, ES, and NASDAQ, and I wanted to see if there was any distinct differences between the three on the daily and the hourly charts. As you can see right here, we'll make it a little bit clearer actually, but you can see that YM has a higher high in the middle while the other two do not. So what does this look like on, let's just say, an hourly chart? You'll see right here very plainly, you get your lower high, your higher high, and then if you go here as well, you'll see that NASDAQ had also a lower high. So this SMT is a bearish SMT. It basically means that because YM swept the highs, the other two are less likely to need to do so. So you shouldn't be thinking that your bearish bias forms only then. It should be based on the totality of circumstances. And now going into this session, I had a bearish bias. Now we're going to focus primarily on NASDAQ because that is the trade that I took today. And I'll show you on TradeZella, I'll show you the entire breakdown, profits, all that good stuff. But first, I want to show you how you're going to take this lesson and use it for your own trading moving forward. So what I want you to do is it's very simple. When you have something like this, an inside day break, you're always going to need to know prior day high, prior day low. So you go ahead and annotate those, as well as if you're inside a parent candle or a bigger candle than the inside bar, obviously this is a parent candle, right? Because it's essentially in charge of the little candle. So we want to know the high and low of that. However, in this scenario, we didn't need to know the high all that much because we noted that there was an SMT up here. So you can mark that out as well. I also like to consider where are we at in the chart. So heading into this week, obviously, that's a key level that I had in mind. Whether or not we hit it is really to be decided on how price is going to develop. I also have this level right here, which we'll make dotted. These are our reference points. And we have one last one, so I don't bore you guys too much. You can see that there's a little fair value gap right here. So this is an area where it makes sense for us to see a rejection. I'm okay with that. Now, how am I looking to trade this? Well, number one, prior day low is going to be a key reference for us. We'll go ahead, drop down to a lower time frame, and you can see right here, you have midnight open, this dotted line. You see that we traded lower, we form lower highs, and we break down. And then we rally, and then we break down again. So where do we look to get positioned in this? That's a great question, right? You can see that obviously when you have something such as a bearish SMT at highs, you're going to start looking at all these rallies when they invert as change in states. That's the thesis. So this could be your entry on an order block. You could be trading the VWAP projection, and I'll show you exactly where I was able to get positioned for this move. It was a little bit early ahead of the New York Open. However, price looked good. I'm not going to argue with a good chart, clean chart. So I saw the rejection of prior day low. That was super important to me. And then I also saw on the lower time frames, we had a pretty crazy price structure. So we had this push right here, which had this opening price right here. You could call this your change in state, or you could look at it as a breaker. Now, I don't want to bore you with this stuff because it's not the candle patterns that matter, it's the context that matters. These are just tools that I use. You don't have to memorize this stuff. We're not in school. A breaker is essentially when you have a high, forms a higher high, and it breaks below. It's that swing formation. And when this happens at a key pivot, that's even better. Now, if you go here, look at the daily, you can see, make sure that this is available on all intervals. Make sure this is available on all intervals. And go back to the 5 minute, boom. You can see that, yeah, this rejected up here very nicely. Then you have this prior day low rejection. So what I'm looking at is the prior day low rejection for us to find some sort of continuation to trade back towards this May 2nd low. That's my thesis. Now, why do I think this is a reasonable target? Well, by using the breaker and that manipulative leg, that sweep higher, right? You see it right here. It sweeps this high. I can use something such as a standard deviation tool. This is another ICT concept that just in my toolbox because I find significance with this stuff. It works pretty well. And you can see pretty much almost to the exact tick, you have this previous low lines up with 3 standard deviations. Now, 3 standard deviations would be considered a larger move, right? Obviously, it's more significant. However, anywhere from 2 to 3 is more than reasonable. Those are reasonable targets for a trade like this. Continuation. Now, I'm done with all the suspense. I'm going to just show you the trade that I took. This is on my TopOne futures account. And just very quickly, if you haven't heard me talk about TopOne, check them out. Don't click off right now. I'm just sharing the platform I use. I have a code. You can use it. Try it. The deal they have right now for 55% off ends in a couple days. So just give it a shot. $6 grand drawdown, $400. It's actually $350 right now. And you get an anytime payout add-on for free. Now, over to the trade Zela to show you the performance for today. I had 2 trades. One was more or less just kind of it was just like an execution. It wasn't really like a trade I was committed to. However, this NASDAQ trade, this is a real trade. If you saw my video on how to pyramid into a trade that I posted just recently, then this will make a lot of sense to you. And if not, just stick around, stay tuned right here. Stay locked in. I'm going to show you exactly how you can be executing these types of trades. Now, this doesn't happen overnight. This is over years of experience in trading and developing myself into the trader that I am today. Don't expect it to happen quick. Why would it? All good things take time. But looking at the chart right here, you can see it was roughly about 40 points on average. I mean, this is about 40 points on average to my best exit, right? Notice how I only add to the trade and I had one exit down here. Now, what happened? I saw that we pushed higher after forming this bearish breaker. We had a fair value gap right here. So I looked to get short on this pivot, like that flop. I see these happen quite a bit in these types of markets where I would like to actually not trade the pullback to the fair value gap. I would like to trade the failure ahead of it because I'm anticipating this gap to fail. And when it does, it creates this little order block down here, and I'm able to go ahead and add to the position. So I add multiple times on different PD arrays or different levels, if you will. So the reason that I'm adding on different levels, I'm looking at something like this inversion right here, as well as obviously I said that order block. And then right here is this pivot formation, swing point formation. That's my core entry. I had like 5 contracts here, added maybe 4 more. Then right here, I started to add heavy because I had sustained such a nasty bounce. My thoughts were, okay, I can let this come back to break even, or I can nurse it a little bit. I can give it a little more room, couple $100, not going to kill me. I'm going to just give it a little bit, baby amount of room. So as it started to rally, what I realized is, wow, this is quite an aggressive move. It's insanely fast off the lows. It bounced at a level. If this was a long, man, I'd be done for the day. However, I see it start to flip over. I'm trying to short as it flips this fair value gap. And same idea as this one up here, essentially, right? And it goes for a couple tries. And the whole time I'm just like hovering on the stop loss around break even plus or minus. This is a skill set. You're not just arbitrarily jamming it tight. I'm trying to see when it is going to not sweep higher. As simple as that sounds, right? I'm watching it to see if there's any sort of clue that I might be in the green to just leave it there. And it wasn't until around right here, about right here, I was in profit, just leaving it. And then this whole way down, I trailed it super aggressively down to here. And then I pinched it off right there to get about even $2 grand on this trade. Now, I would rate this execution probably 10 out of 10. I would say this is by far an absolute clinic of a trade. This is a setup that I would take 20 out of 20 times. Perfect setup. My initial risk is genuinely about right here, 19,873. Now, when you do something like this and you have when you average into the trade, it calculates it as if your whole lot size determined your risk, even though these are entries that I added into it. So my initial risk was maybe like $100, $200, maybe $200, I would say. So for this to be more accurate, it's got to be like, yeah, you got to make it like that. So the realized R multiple based on my initial risk is quite high. This was a very, very, very precise trade. I was able to get my entries so tight, just perfect execution. This is pre-New York, as you can see. This is ahead of any sort of pre-market. And my exit, phenomenal. I'm not sitting here trying to toot my own horn. I'm just demonstrating that this is a very technical trade. This is some of the best examples of what I like to do. So today was a super clean day. Over here on May, just two trades. That's all I got right here. You can see over here on TopOne, we'll look at the NQ, pull up the chart. So this was executed mostly on a 30-second. I know TradeZella is going to show you the 1 minute. However, we go back in time, we see, boom, right here. Let's see if we still have our levels. So this was our structure. Let's get 2 time frames open so it looks a little cleaner. You can see right here, you have that breaker that we talked about up here, you know, the down close candle. This right here is your breaker. And then you have entries on all these pullbacks. Now, if we go ahead and look at this on like a 15-second, you can see that it's very, very, very precise. Like it wanted to run higher, but the way that it was pushing at these highs, it wasn't giving me any indication that it wanted just to sweep or start accepting higher, because it kind of just ran out of steam. And now I've learned something with these early London or Asia type trades is when a market is running in one direction and it runs out of steam, you could just put your stop right there. It seems like you wouldn't be able to, but it does work pretty well. In a scenario like this, it's perfect, you know, because this is such an exhaustive move that my risk on all of the stuff where I'm about break even and trying to just hold on was between like 865 and 855. I did not move it up here at all. I moved it like around this area at most. So I was able to keep the risk relatively tight. I don't think my open risk was ever more than $200 for any of this. And with, you know, 20 micros by the end of it, let's double check that. You see right here, yeah, we had 25 contracts, 25 micros, so 2.5 minis, and we never had more than a couple $100 of risk. That's what I call an A+ trade. These are the types of trades that will really build your profit factor and all of your other stats as a trader. So again, hopefully you learned something from this video. I know it seems complex, but just again, we're going to bring it home one last time over on TradingView. Keep it very simple. We had a key daily level, we saw rejection lower, and we had a target. This was based on the inside day break. Now, how do we utilize this? We could have shorted on this. We could have caught this continuation, or we look for that mid-trend pullback, right? This is that get involved in the trade. This is that pullback to VWAP. Obviously, it's a little off. Give us some slack. Could be better, right? But it gets the job done. So this mid-range pullback, you have obviously, you know, break, retest. There's a million ways you can look at it. And all I'm trying to do is show you that maybe changing your perspective a little bit on how you read price might be beneficial. I'm not saying you have to use X, Y, or Z. I'm just saying if you use one of them, look at it the other way. You know, this could be your pullback to a moving average. This could be your point of control with volume profile. I guarantee there's a lot of concepts that coincide at that point of interest. Now, when we're looking at this and we rewind it just a tad, you see up here, yeah, boom. But then when you go and look at how it developed over the day, after that move happened, you can see that it was quite a relevant move based on volume profile. Considering right here, you get the overlap of the point of control, and that's where we consolidate all day. So again, this is the session before FOMC tomorrow, so it's a little bit choppy, but the key point is this. We saw a level, we saw it interact, we could have structured our trades there, and if not, we look for any sort of continuation between these 2 points. That's the trade. I was able to catch this down to where did I exit? Great question, right? Did I exit based on this target down here? No, I didn't, because I knew that there would be likely a lot more pullbacks. So instead, what I opted to do was add to the trade and then lower my target. I don't want to reach further with more size. I'd rather reach less distance. That's what the size is helping me get, more money with less distance traveled. So that's another way that I like to offset risk. If I'm adding contracts, I'd rather get the trade fulfilled quickly rather than hang on for dear life. But there's a time and place for everything. So inside day break, trade from point A to point B. And again, what does this look like on the daily? Just to make it really clear, we saw that there was a likely area of rejection, and we have this little pocket of void down here. Get a little zoom. Boom, there's your fair value gap, and there's your May 2nd low right here. Friday, May 2nd, little void, and we just tag right into it. Now, what can we do? That's a great question. We could trade higher from here, or we can continue the roll. We're going to wait for FOMC because we are not fortune tellers, but I hope you can utilize this inside day break. Take special notes on the SMT at the highs. Look at how I'm targeting certain structures and look how I'm aligning with those bigger moves. So if you got something out of today's video, I want you to leave a comment down below. Tell me what it is about your trading that's holding you back the most at this current point in the year. We're almost halfway done. We're getting close. Are you where you want to be yet? And if not, tell me what you're going to do to change it. Till next time, we'll talk soon. Take care.